Hey everybody. So I'm often asked how I make money in quiet markets. And one of the things that I talk about a lot, if you follow me on TikTok, in fact, if that's why you're here, thanks for coming and checking out this video. One of the things that I always talk about on TikTok is the importance of living below your means. When things are great and people are making money, not just in stock trading, but in any job, when the money's rolling in and you're killing it at work and you're doing a really good job, people tend to live the good life. They're like, oh, it's always going to be here. Yeah, let's go buy stuff. Let's go eat out all the time. Let's upgrade our cars. Let's update our phones. Let's buy clothes, buy shoes, buy fancy watches. And when the shit hits the fan, as it is always going to do for various reasons, whatever the reason is, something is going to happen. Whether it's the market gets quiet for me, or for you, it's economic downturn or a natural disaster where you didn't have the money to plan for, or a partner gets laid off, or you have a sick parent or a sick pet. There's always going to be some unforeseen event where you're going to go, oh my God, there's no money. That's why I stress living below your means, no matter who you are. If you're a stock trader, if you're a doctor, if you're a teacher, live below your means, because something is going to happen at some point. That's just life. So people always say, like, do you short? Do you buy puts? If we're in an actual downturn, sure. If the markets are just kind of flat, like they've been February, like they've been in March, no, because I'm an optimist and I believe that the market is going to go up. And so why would I bet against something when I think it's just a short-term consolidation or a short-term kind of pause? I'm pretty optimistic about the next couple of years. Reason being, we've got our stimulus thing that just got passed. We've got this huge infrastructure thing that will hopefully be passed soon. We've got all this Green New Deal energy stuff that's going to be happening. Maybe not the Green New Deal, but green initiatives that are going to be creating jobs, good for the environment and all that stuff. I think the next 4 years are going to be just fine. So I'm not trying to bet against these markets. I'm just sitting back. It's a little boring, sure. February was quiet. March was quiet. But you don't see me stressing. I'm not worried. I'm not freaking out. It gives you the time to enjoy your life. That's one of the luxuries about this job, is that it gives you the time to enjoy your life, live life by your terms, do what you want, live how you want, and not worry so much. I'm not worried. I'm a little bored maybe, and if we were in any other time other than COVID, maybe I'd just look at it and go, hey, these markets are kind of quiet. I'm getting on a plane. I'm going somewhere. And if, by the way, I'm on vacation and the markets tick up and have some massive rally, I'm not going to be crying about it because, again, I'm prepared for this. I have my rainy day fund, and I'm not really worried. So I'm just kind of sitting around, and that's why I want to use this video as an example to show you why I decided to make this trade and why I decided to take profits when I did instead of giving it more time. So here we have the 5-day chart. Now, I told you about this 3 days ago, which would be here on March 29th. I picked up 300 shares at 764, which would be right around here somewhere in this area. I picked up 300 shares. It was around $2,300 investment or trade. Now, people are going to look at this and they're going to go, how did you know it was going to go all the way up like this over the next 2 days? I didn't. I had an idea. I had a hunch of where it could go. I didn't know that it was going to happen the next day and the day after. Of course, nobody knows that. That's why it's called swing trading. You get in when you think you're at a good price, and then you just sit back and wait for it to go back up, like a swing. It could have been days. It could have been weeks. For me, in this instance, it was 2 days. Right? Bought it here, next day, and then today. So the reason I took my profits today is because the markets have been kind of quiet, kind of slow. And hey, I had a profit, I'm taking it. And it was a good one. It was $468 in 3 days. So I'm not stupid. I'm not gonna hold out. Maybe it can get a little higher. Sure. I wanted the money, basically. And it's my money, so I can take it whenever I want. Like that commercial. It's my money, I want it now. I wanted it. If the market was really churning along, and I had a bunch of different trades going, maybe I would have held it and just said, let's see where it goes. But it was 3 days, really 2.5 days, because I picked it up around here somewhere. So in 2.5 days, I made almost $500. I'm taking it. That's my thought process. If you are, if you have more time to spend on this, like it's a side hustle for you, let me show you why you might want to consider holding it for a little longer. So let's go back to the 180-day chart. Now, you'll see this red line here. This is my support line that I've plotted out. I've talked about this before. We don't really care what happened 3, 4, 5, 6 months ago, all this stuff to the left, who cares? What we care about as traders is the most recent volatility. Where has this stock gone within the last couple of months? So we can see that it was up here at 15.28. That's pretty good, but this was in January. And we can see that it was it was around 13.50, but this was in February. So if you have the time on your side where you can make a trade and then just sit back and hold it, maybe it gets up to here. This is why I like swing trading for part-timers, people who are looking to make this like a side hustle. You can set alerts if you have a full-time job, whether you're in an office or you're a parent or you're whatever, and you don't have the luxury of sitting at your computer all day. You can always set alerts along the way. And you can set stop losses, you can set buy orders, you can set sell orders to say, hey, if it gets to this price, sell it. For me, I'm sitting at the screen all day. So I'll make my decision based on what I'm feeling in the moment. If you're in an office, and by the way, that's why day trading doesn't really work for full-time office people, because you got to be looking at the stuff all day. If you're working in an office and you pick the stock up, say here at 790 or whatever, and you go, if it gets up to around 10, I'll consider selling it. All you do is you right-click on the chart, go to Add Drawing, take your price level tool, drop it around, let's say 990. I don't know why, there it goes. And then right-click on it and hit Create Alert with Drawing. And then all you do is say cross above and create. Now you can go and live your life. You've got your alert at around 990. If the stock hits 990, your phone is going to buzz and you're going to get a message. Now, if you're working in an office somewhere and your phone goes off, buzz, it's close, right? I never say set it at the target price. I say set it a little bit below, because you want to give yourself a moment or two to gather your thoughts, pull up the chart, make a decision, look at what's going on, read the news. If it's at your target price, you're going to feel that rush of anxiety. I have to make a decision right now because it's where I thought. If you set it a little bit below, it's like you're buying yourself a little bit of time. Okay, we're close to my target. Let me look at the relative strength. Let me look at the chart. Let me look at the news. Let me make a decision. Oh, there's a lot of volume. Oh, there's really good news. Okay, I'm going to set my new price target to around 13.45 because that's where it was the last time. I'm not going to sell here because of good news. And then you can go and put your phone in your pocket and walk out, and go back to the office. Or you can look at it and go, ooh, volume is slowing and it's overbought, like here when it turns red. I'm going to take my profits here. And you can sell it, and then you can go back and do your thing. That's why swing trading is so great for the part-timers. I have set up my support line right here. I know that every time it gets to this level, it bounces back up to around the $9.50s to $10. See, it does it here, it does it here, it does it here, it does it here. Even though it breaks below, it comes right back up, so I'm not concerned. It's not like a downtrend where it just sold off. And again, we get up to this level. This is resistance, right? You can see it's resisting going higher. It's resisting going higher. It's resisting going higher. So that tells me that next time it gets into this price range, it's going to reverse and head back down, where it's going to then hover around this resistance, this support line. I see it gets down here again over the course of days, maybe a week or two. So I buy. I bought right here at around 764. So where am I going to sell? Ideally, I'd be selling up here at around the $10 price range. The reason, however, that I sold here today when I did, let's go back to the one-day chart, is because we had a big pre-market. Now, normally when we have a big pre-market, it's not sustained. Usually when we have big pre-market pop like this, it immediately drops. And it kind of did, as you can see. It got all the way down to 897. That's a big drop from 947 up here to 890 something. What I like about this setup is that it's hovering on this 20-day moving average. It's not really crossing below, even though it does a couple times. It kind of hugs. So what I could envision happening today is I imagine that we're going to consolidate at these levels and then maybe even go a little bit higher. Maybe we do hit $10 by the end of the day today. You can go and you can check. The reason that I sold right around, I sold at 920 this morning, which is right around here. Did I sell at 920? Let me double check. Yeah, sold at exactly 920. So 920, minus 764, because that's what I purchased it at, is $1.56 difference or gain. Times 300 though, because that's how many shares that I had, 468 was my profit. So in 2.5 days to make $468 in a very quiet market where there haven't been many trades going on for me, that's why I took it. The way I see it is I'd be stupid to not take it. I could have taken half. I could have taken 2/3. I could have sold 200 shares and kept 100. So I took it. And now what I'll do is I'll wait and I'll see what happens. So what we can go back and do now is we can go back here. We can put down a little bit of a resistance line right around here. Now, the next thing I'll be watching is where the stock goes from here. If it gets back up to around $10 and then starts to reverse course, then I'll wait for it to get back down into the 760s. If it breaks resistance, then if there's strong volume, I might even consider buying, because this is where it could get to next. So we draw another one, and this is our next price target. So as I've mentioned before, I like to change these colors to green because that's my price targets. I'm price target here and another price target. I edit property. By the way, you right click and just hit edit properties. These are my next two price targets. So like I said, if we break this, I'm buying potentially if the volume is strong, and I'll hopefully sell somewhere around here. This could be a longer term swing trade though, because this is over the course of several weeks that it takes to get to this level. And by the way, just because it got here once, again, you got to say it, doesn't mean it will do it again. So what's my exit strategy, right? What if I had purchased this stock down here at 764? When would I have sold it? If it broke resistance, where would I have sold? Now, I always talk about the importance of having a plan. I would have sold around 5%. So I did the math earlier. If I had purchased at 764, 5% of that is 725. It's a 39 cent. 5% is 39 cents, which would put the stock at 725, which would be somewhere around right here. So if I had purchased at 764 and it dropped to 725, that is where I would consider selling. I don't say that I absolutely would sell. I say that I would consider selling because you have to factor in everything else. Maybe it's oversold at 725. Then I would hold. It's all about your risk tolerance. How much are you willing to lose, right? The math would have been if I had sold at 725, if it had started to go down, I would have lost around $117. I have a higher risk tolerance, so maybe I would have raised that stop loss to 7%. Maybe I would have said I'm willing to lose $200 on this trade or $250 on this trade. So you get the idea. You have to play around with your own personal risk tolerance. How much are you comfortable losing? If the answer is I'm not comfortable losing more than, say, $125 on this trade, then you set your stop loss at 725 or your mental stop loss if you're actively watching. And you say, okay, when it gets to 725, that's when I'm out of this trade. Luckily, that didn't happen for me. But I would do the same thing here, and I would do the same thing wherever I was. My stop loss is usually 5 to 7%. Sometimes it's even as low as 3%. It all depends on what's going on with the stock. I hope that gives you a little bit of a deeper understanding as to why I trade, what I trade, when I decide to exit, when I decide to take a profit, why I decide. There's so many factors here, right? If the markets were really churning along, I would have probably held it and waited to see, but it's been quiet, so I wanted the money. That's why I took this profit right here instead of holding out for a little bit more. I always say, be a little less greedy than the other guy. That's what I always say. So I'm happy with the profit, especially that it was 3 days. I hope you learned something from this video. Please don't run out and buy the stock just because I mentioned it. Like I said, I'm not in this stock anymore. I'm not in this trade anymore. I'm in wait and see period. We want to see what happens here. We want to see if it gets here. We want to see if it breaks a support or resistance line. So there's too many variables right now. And that's why I don't recommend anyone copy any trades from anyone ever on the internet, because you just don't know what they're thinking. Anyway, talked enough. Thanks for watching. Have a good day.